the stock coming down. Until then, you can witness good buying action.
All right. We have Ashish Kapoor joining in as well. Welcome, Ashish. We were just talking about Tech Mahindra. The numbers seem a little weak, but the management commentary seems to give a boost to the share price. It's up about 8%. What's your view on Tech Mahindra?
Well, I think it's the view is positive because the stock has been lying low for quite some time, and what has happened during this course of time is that the management has changed. The vision, which of course the results were quite weak and quite insipid, but whatever they have revealed in terms of their vision for FY27 is what has I think raised hopes of a turnaround in their fortunes. Otherwise, over the years, it has been underperforming its peers. So there is hope that now, with the new management in place and with the new plans and the new outlook, and including scale, their focus on scaling large accounts and leveraging their synergies from their past acquisitions, and the various other points which the management has laid out, has given confidence to the market that the underperformance may be getting over soon. And otherwise, it's a very well-established company. So once I think they get their mojo back, the upside looks very good. So I wouldn't say today because it's already on a very good uptake, but on declines, I think one could look at buying Tech Mahindra. IT sector as a whole has not done much, especially large cap, and Tech Mahindra, even within the IT space, has been lying low. So there is plenty of room once the turnaround of their performance happens.
Yeah, fair point.
So with that in view, I think with 2-3 years kind of a time frame, you should look to buy on declines.
Okay, fair point, Ashish. And it is in fact off the high point of the day already. It was up as much as 12%, is now up less than 8%. Let's talk about the next question, which is a broad question, but Nirav, this is fan mail for you, if you can call it that. Satya is writing in and he's saying that you are his favorite and that you give fabulous recommendations. To that end, he's asking you to give 2 short-term views or 2 short-term recommendations from a perspective of the next 3 to 6 months.
Thank you, Satya. But at this point of time, with the election so close by, very difficult, to give a stock from a 3 to 6 month perspective. Only thing that I'll tell you, I'll give you a theme which I've been actually following. As a theme, I like fertilizer. Lots of stocks in the fertilizer space have seen a 5-year, 10-yearly breakout. So I believe, in the next 3-6 months, even 1 year, this is one sector which should perform very well. Now, out of those, I believe GSFC and RCF are 2 stocks which I really like because their long-term patterns are very good. So I believe one can look to buy these 2 stocks at current levels. Even if you get declines, on declines, 200 should be the stop loss for GSFC and about 130 for RCF. But I believe GSFC should do about 350, 400 odd very soon, probably in the next 3 to 6 months, and RCF, probably 250 odd. So both can give you good gains going forward. So hopefully you can add.
All right. The next counter we're talking about is Cochin Shipyard. This one's from Thomas from Kerala. They say they bought the shares and they sold it at 1100 levels. The stock has since moved up and is trading close to 1,336 rupees. Ashish, I'm going to come to you on this one. We've seen the stock move up quite a bit in the past sessions. In the last 5 sessions, it's up about over 20%. Do you think it's an expensive stock to buy at this juncture? Would you advise buying?
No, I think one can wait. One can easily wait. I think there's too much of optimism being built in, and the run-up, rightly said, has been a lot. So I think just wait. I think things will cool off. Otherwise, a very well-managed company, but I think can also be a great future. But I would wait for declines before entering.
Coming back to you on Bajaj Finance, it's down quite substantially in trade today, 7.5%. It was a toss-up between Tech Mahindra and Bajaj Finance as to which stock we should take. Incidentally, we've got a question from Rahul, and he's asking what the reason for the fall is. Could it be because you're seeing some kind of an impact of the regulatory action that was taken by the Reserve Bank of India on the kind of growth that the company has reported, and the outlook for AUM growth, if I'm not mistaken, 26 to 28% in the current financial year? The expectation that there's going to be another hit on the margins, it's going to decline by as much as 30 to 40 basis points over the next 2 quarters. What is your opinion?
Well, I think the company, of course, has historically done very well, but it's kind of a hit roadblock. Now, usually, I would say that, when companies like this hit a roadblock, it's a great time to accumulate. In case of Bajaj Finance, I have a few reservations where I think that the time is not right now. One should still wait. One is that, its valuation is still very high. It has always been high. But earlier the growth trajectory was very clear. Now it is very cloudy because of firstly the regulatory issues which the company is somehow facing very regularly. The second is that competition from Geo especially is looming. It's not yet really happened, but the fear in the market is that they now, for a long period of time, they did not have any serious competition. Now with Geo really scaling up the kind of plans which they have made and the kind of financial backing which they have, that is a possible competition coming up very soon. So with keeping all that in mind, I think this corrective phase or whatever you call it, Bajaj Finance, could be much longer stretch than what was earlier their corrective phases. So I think one can still hold on, don't buy even at these levels. I think the stock most likely will underperform even for the next few quarters. Buy only when I think it really falls to maybe less than 6,000, or we pass through and we see what Geo does, and then maybe at some point of time we can take a call on it. Otherwise, until it becomes really cheap, less than 6,000, one should not be buying into that.
All right. Fair point. Ashish and Nirav, stay on. We'll take a quick break, and after that, we'll take more of the questions. Welcome back. You're tuned into Ask Profit on NDTV Profit. Let's dive into the queries again. This one's on Gujarat Gas. Heta from Ahmedabad is writing to us, and they say they bought the shares at a price of 250 rupees. It's currently over 550 rupees. So good amount, a considerable profit there, Nirav. Would you suggest holding on to it for a little while longer?
Yep. See, at this point, this stock is into a consolidation. It's making a flat kind of a consolidation at this point. So probably, exiting the counter right now would make sense. Once this stock has a breakout above 570, then you can re-enter and, this stock can probably move up towards 680, 700 levels post the breakout. But at this point, I don't see much upside from current levels till it's in consolidation.
Okay. Just want to point out that we'll take one query per viewer per day. That's because we have a lot of questions that we have to take. The next question is from Swastik, and he's asking about Madan Sumi wiring. And this is something that he's bought. I do not know what level he's bought at, but he's looking to hold for the next 2 to 3 years. Ashish, is this a good idea?
It's a very good idea. I think one of the companies which is really doing very well, and I think scaling up in a very big way. And I think with the kind of new capacities coming up in the auto OMC space in the next few years, I think Madan wiring has a great future going ahead. I think definitely a good idea. I think we should, in my opinion, make a lot of money here.
All right. The next counter we're talking about is Karnataka Bank. This one's from Sri Kishore Sharma from Bihar. They say they bought the shares at a price of 440 rupees, and they're looking for a longer-term view on this. It's below that price. It's trading at around 228. Ashish, from a longer-term perspective, how does the bank look? I mean, for somebody who's sitting on a loss like that, should they maybe exit the position, or there's upside in the future?
To be honest, Karnataka Bank, I really haven't tracked for quite some time. I really don't want to comment on it. Right?
All right, let's take a technical check on this as well. Nirav, how does it look, Karnataka Bank?
Yeah, so I think the price that he's quoting might be before that rights issue had come in. So post the rights issue, I think he's sitting on a profit at this point. Because this stock is at all-time highs, near the all-time highs, and its all-time highs are around 280 odd. So yeah, I think he's sitting on a good profit at this point. That is one. And secondly, this stock has seen a 15-yearly breakout above at 200 odd levels, and this has been a long time coming. So definitely, I believe this is one stock which you should be holding on. This stock can move up towards that 350, 400 levels very soon. But the only thing is, there has been a significant run up from sub 100 odd levels up to 280. So there is some pull up that is coming in. It might probably take a couple of weeks to about a month for this pull up. But then once the stock starts to move up, it should move up very aggressively up to that 350, 400 levels.
Okay. Interesting. We've got a viewer, Akshay, who's tuning in from Sasaram, which is in Bihar, and he's asking about Geo Financial Services, GFS, which he's bought at the attractive level of 90 rupees, and he's looking at a target for the next 3+ years. He's not in a hurry to sell, despite the fact that the stock has had quite the ride in 2024 so far. Nirav, I'll come back to you on this one, since Ashish has already weighed in on GFS. What do you make of the journey so far in 2024, and should you book some profits at all?
See, Geo, from the time it listed up till now, it's been a slow and steady up move for the stock. I think it might be 190 odd, which he bought it at. So probably, he can continue to hold on. The overall trend is still positive. There is, generally the volumes is what I look at, and the volumes are increasing as the stock increases. So that's a good sign. I would believe the stock has the legs to move up towards that 450 odd levels. Once that 450 comes in, that is where you can probably look to book some profits there. But at this point, continue to hold on.
I might have gotten the price wrong, and I think our viewer might have missed out that one digit. But 90 is not possible. It never traded in double digits, if I'm not mistaken, right? Yeah.
Next counter we're talking about is Info Edge. This one's from Jayant. They say they bought the shares at 6,150, so slightly above what it's currently trading at. Ashish, I'm going to come to you on this. From a longer term perspective, how does the counter look? It's moved a little bit in the last 6 months or so, about 46%.
I think looking very good. In fact, I think the kind of investments in the digital space that they have, and the kind of e-commerce and other websites which they have, which they are holding, I think there's a lot of scope. I think it might take time, but this stock could be a real good capital creator from here. It's a little risky because it's all into new technologies and new ideas, but most of them are very well established. So I think you should buy and hold on for some time. I think the way up can be very interesting.
Speaking of well-established, Ashish, this is a question for, I would think, portfolio construction ideas, where Shirish from Pune is asking about whether to add Titan or Larsen and Toubro from the perspective of the long run, which will give better results for a period of 5 years or so. What's the view?
Well, both are looking good, but I would still think Titan is better because the kind of nature of business which they are in, wealth can be much easier to multiply than Larsen, which is a very capital intensive kind of industry which they focus on. So my bet would be on Titan between the two.
All right. Next question is on Motis and Jewelers. Now, this is a recent listing. Ashish, do you have a view on this specific counter?
No, I haven't tracked.
Okay, they're also asking about another counter, which is Thyrocare Technologies. They haven't mentioned the buy price, but they say that they're in losses. Ashish, is this the one part of your coverage?
Yeah. Thyrocare is very good, looking extremely good. I think just stay invested. We should do very well going forward.
Okay. A broad question, are renewable energy cores overvalued, is the question that's being asked by Amir. Which do you track, Ashish? I guess a lot of the frontline power companies are now looking at generating through renewable. So therefore, they have some footprint or presence or the other. But do you think that these companies are overvalued?
They are overvalued if you look at normal conventional parameters, but given the kind of scale up which can or which is likely to happen, you factor that in, then they're not overvalued. The scale up is going to be huge. Of course, the risk is there that every company may not be able to scale up. And I think some of those companies like Porostate Renewables, pretty well established. Sulek, SWE, LDCP, very well established again. So these are the few companies which I like and I track. And I think despite the run up, the future looks very interesting in these companies. And I think generally the future looks very good. You just have to be a little more careful with the stocks which you select.
All right. Next counter we're talking about is Oil India. This one's from Sasi, if I'm not wrong. Okay. And they bought the counter at 640. It's currently at around 630. Nirav, how does it look on the charts? Should you continue holding on to this counter?
Yeah. So probably, this stock, after a long time, again, it's a 15-yearly breakout which is coming for this stock above that 350 odd levels, and the stock is almost stable. But what happens is generally whenever those 15-yearly breakouts come in or long-term breakouts come in, the stock not only doubles, it actually moves up quite significantly. It can probably 3x, be a 3x or 5x as well. And this stock, the overall trend is still positive. The volumes are increasing, which is a good sign as the stock increases. The stock should move up towards the 750, 800 levels in the near term. Probably I'm looking at 1,000 plus in the longer term. But yeah, you can hold on and you can keep a stop loss of about 610 for a short term trading view.
All right. In fact, we're completely out of time, and there are still questions pouring in, but unfortunately, we can't take them today. Ashish, as well as Nirav, thank you so much for joining in and for answering all the questions that you did, and wish you a very happy weekend. Viewers, like I said, we're completely out of time, but there's lots more that will come up over the course of the day. And of course, we'll be back on Monday to take more of your questions, so do stay tuned. This is NDTV Profit.
Benchmark start May series on a choppy note. Sensex trades below 74,200 while the Nifty trades at 22,500. Barring financials, all sectors trade higher, led by IT, media and consumer durables. In tech, Mahindra gained as much as 12%, post reporting a significant rise in Q4 profits. On the other hand, slow growth for rural business haunts Bajaj Finance stock in the red. More earnings on the block. HCL Technologies, Maruti and SBI Life are set to report their March quarter numbers today. And Lok Sabha election enters phase 2. All eyes on Wayanad as Rahul Gandhi set to battle CPI's Annie Raja and BJP's K. Surendran. Hello and welcome. This is Hot Money. I am Agam Vakil, and in this show we take you through all the stocks which are buzzing in trade. But before that, a quick look at the markets, which are at the moment quiet, I would say the least, and we haven't seen too much traction there. It's a quiet Friday morning, and sure, it's marginally in the red, but the action is all in stocks, not as much as far as the indices are concerned. The Nifty holding on to 22,500. The Bank Nifty as well is currently very, very quiet in trade. That's also down by around 0.2%, and we haven't seen too much of reaction. At least as far as the banking stocks are concerned. However, there is a sharp reaction in a handful of IT stocks, Tech Mahindra specifically, where we have in fact seen a surge here, and it's one of the key movers in today's day of trade. It has given up a little bit of its gains on an intraday basis, but save for that, otherwise it's been a fairly good day of trade for Tech Mahindra. Of course, let's not forget Bajaj Finance on the other end of the spectrum on the Nifty 50 under quite a bit of pressure, also on account of earnings. This one is down 8%. Of course, that said, when it comes to the constituents of the Nifty, let's very quickly take a look at where that pull and push is with respect to what's keeping the index slightly lower. It is essentially Bajaj Finance in terms of a weightage. ICICI Bank and L&T along with SBI also contributing to the downside. And what's really contributing to the upside in terms of points, absolute points, is Tech Mahindra, HDFC Bank and HCL Technologies. HCL Technologies, of course, is awaiting the numbers today, and we should have more clarity on the Q4 as well as what we can expect going into FY25 a little later on the day today. But what about the broader markets? There is outperformance there. Both the mid-cap index is up around 0.8%. The small-cap index continues to outperform. That's also up around 0.8%. And, the outperformance in general for the small-cap and the mid-cap index continues with respect to some of your key benchmarks like the Nifty 50. And even in terms of your advance decline ratio, we're looking at about 12 advances for 7 declines on the NSE in general as a whole. Well, these are some of the factors that we're going to keep an eye on. With that, let's talk about that list of all the stocks that we're taking up on our show today. We're certainly going to talk about Tech Mahindra. We're talking about Bajaj Finance. We're addressing L&T Technology Services, as well as Zomato, where we have yet another broking firm coming up with a note, and of course IndusInd Bank. And we've also had the conference call from Schaeffler India, so we're going to consider Schaeffler India as well. So we'll be keeping an eye on a handful of these names, and to take us through, what they make of these names, well, we have Amrish Baliga, independent market analyst, who's also going to join us and perhaps help us decipher some of these stocks. Amrish, good afternoon. Thank you so much for joining in. Amrish, before I come to you, let me get on my colleague Rucha to tell us about the key takeaways from the Tech Mahindra conference call. Rucha.
Thanks, Agam, and good afternoon. Tech Mahindra reported its results last evening. While the numbers were quite in line with the estimates, what is interesting is the 3-year turnaround strategy given by the new CEO, Mohit Joshi. Now, here are 4 key highlights from the turnaround strategy. The company expects to to report a revenue higher than its industry peers over the next couple of quarters until FY27. Now, in terms of EBIT margin, they also aim to clock a more than 15% EBIT margin by FY27 from the current levels of 6.5%. In terms of ROCE, the company aims to clock a 30% target for the return on capital employed. And lastly, in terms of capital return to the shareholders, it aims to give out 85% of the free cash flow to the shareholders in terms of dividends or buyback.
Rucha, thank you so much for getting us that update. Amrish, welcome to the show. Some ambitions set by the new CEO who's come in and taken over. We do know about Tech Mahindra's underperformance with respect to its peers in the industry for the past many years now. But you think things can change? How are you looking at Tech Mahindra at the moment?
No, because things will surely change under this new leadership, because we have seen the recent steps and they seem to be in the right direction. For example, we have seen the SBU right sizing, investment in the top accounts, vertical delivery teams, some changes in employee investments they have made. So clearly, I think the target which they have of 15% margin by FY27 should be achievable. And even if you look at this quarter's earnings, I think it was a bit of a beat on sales. Margins were in line. And I think the market has really taken well the focus and the management commentary. So because of which we have seen this upside. But then again, I would say that immediately if you look at the next couple of months, there may not be a huge upside. But then if you're talking of holding on for a year or two, I think it should give you a decent sort of a return from here. Because the management has indicated that FY25 will be like a year of turnaround following stabilization in FY26. And you'll have those strong returns coming in FY27.
Okay, well, let's move on and talk about another tech company, and that's LTTS. Now, again, a few years ago, LTTS was all the rage. A lot of investors were weighing for it, and at some point in time, we did see it move and surge. But it does seem like that particular phase is done with, and now we're looking at a little bit of an underperformance coming into play. Before I go across to Amrish, let's listen to the management in terms of how seasonality has played a hand in the earnings coming through. Listen in.
So if I look at the quarter gone by, 5.1% constant currency growth quarter on quarter sequentially, amongst the best we've had in the last few quarters, number one. Number two, 17.9% growth in constant currency, getting us to a $1.2 billion run rate, where we were $1 billion less than 12 months ago. So I do believe, all in all, I think the teams have done amazingly well this year, given the climate that it was. Multiple $10 million plus deals. In fact, if I was to reel off, we've been able to close a $100 million deal this particular year. We've been able to also get in multiple $20 million, $30 million deals, and $10 million deals. So all in all, pipeline stronger than last year, and stronger than last quarter. So we do believe that as we move forward, we will see traction continuing to improve. Again, knock on wood, and we are of course being cautiously optimistic.
Right. So Amrish, just a couple of weeks ago, it seemed like LTTS was back to make new highs. And since then, we have started to see a correction. Of course, today, the correction is a lot starker because of the earnings. I reckon the street at least has not given it a thumbs up. What's your view here?
No, I think the margins were below estimates, because of which we have seen this correction. At the same time, the FY25 guidance also is muted. So I think it can correct a bit more. But I think supposedly closer to about 40 to 4,300, it makes sense to look at buying from a longer term perspective, because whatever said and done, order flows have been quite decent. I mean, whatever the management just now spoke about, that they have one $100 million order, another one is $30 million, two deals of $20 million and one deal of $10 million. So I think, this is decently positive for LTTS. So I think you should look at buying closer to about 40 to 4,300.
So those are the levels that you can keep an eye on when it comes to LTTS, 4,200 to 4,300 rupees per share. And from there on, we move on to another important stock that has been buzzing, again, under quite a bit of pressure. That's Bajaj Finance. Let's get in Harsh to understand the reason behind the weakness and potentially what's behind the numbers as well. Harsh.
Well, thanks, Agam. What you're actually seeing is numbers broadly in line with what estimates were, but the disappointment has come with regard to the commentary. 4 key pieces, we'll try to break that down. 26 to 28% FY25 growth number. That's what has been given as a guidance. But what Bajaj Finance has done in FY24 is 34% growth. So essentially, they've trimmed down growth estimates by quite a bit for FY25. One led by their rural B2C business, which